Hi, my name is Sara Ross, and I'm with Undaunted K-12. We're recording this video to help school district leaders, their partners, and state agency and policymakers understand the latest with energy tax credits that support clean energy projects in schools. As a reminder, the Inflation Reduction Act supported deployment of several clean energy technologies that schools can use, including ground source heat pumps for clean heating and cooling, solar energy so that schools can produce their own low-cost clean energy, thermal and energy storage, which can be used to store electrons for later use. This is for both resilience and reducing our utility costs. Electric vehicles, which could be electric school buses, but also other fleet vehicles that districts own, and EV charging equipment. School districts are still filing for and receiving reimbursements from the IRS for installing those eligible technologies. We track schools using elective pay on our website, so check out our blog post listed below, and if your school district has received a check for energy tax credits, we'd love to hear about it, so please send us a note so we can celebrate you. To understand what the July 2025 budget reconciliation law changed, it's important to remember that these different technologies are governed by different tax credits. So ground source heat pumps rely on Section 48, the investment tax credit. This is a legacy energy tax credit that's been around for some time now. For solar energy and thermal and energy storage projects started in 2025 or later, they rely on a new tax credit, the Section 48 capital E tax credit called the Clean Electricity Investment Credit, otherwise known as the Tech Neutral tax credit. Electric vehicles rely on Section 45W, and EV charging equipment uses Section 30C. The Inflation Reduction Act provided phase-out timelines for these credits that were far into the future. This allowed school districts and other entities to make a plan to incorporate these valuable technologies into their facilities. The July 2025 law changes many of these phase-out dates, but not all. For example, the phase-out date for ground source heat pumps is left intact. School districts and other filers have until the end of 2034 to commence construction on these projects and still be eligible for a tax credit. Electric vehicles, however, are in a different situation. That tax credit expired already in September 30th of 2025. And the tax credit for EV charging equipment will soon expire. Those pieces of equipment need to be placed into service by June 30th of 2026. For thermal and energy storage, the phase-out timeline is still the same. We have this credit available for many years to come. Those projects need to be commenced by the end of 2035 to be eligible for a tax credit. However, Congress did apply new rules to these projects called prohibited foreign entity rules. We have another video that goes in depth into these rules, so check that video out if you're planning or have one of these projects already in progress. For solar energy systems, we have both an earlier phase out. These projects need to be placed into service by the end of 2027 to be eligible for a credit. And they also need to contend with the same new prohibited foreign entity rules that apply to thermal and energy storage projects. There's one quick nuance to mention on the credit expiration date. Projects that start by July 4th of 2026 buy themselves another 4 years to place into service and still be eligible for a tax credit. If you'd like to stay up to date on energy tax credits, check out our hub and bookmark this page. We'd also encourage you to check out our page devoted to ground source heat pumps, since this technology, which is very valuable for schools, has tax credits that are available for many years to come. Thanks so much for watching our video, and please reach out to info@undauntedk12.org with any questions or requests for assistance. We're happy to help.